Guys, welcome to my YouTube channel, and this is my first video actually, and on this video I'll be walking you guys on the term risk management in trading and why it is important, the benefit of risk management, and how it can help you in the long run if you implement it rightly. So on this video I'll be walking you guys through my own personal strategy on risk management and how it has helped me. I'm going to give you guys a good explanation. So I'll be using this display. I'll personally won't be moving the chart, the screen. So just pay attention to everything I'm saying, listen closely, and I hope you learn something from this. So let's dive in. So what is risk management? I'll give you guys my own definition. So risk management is a process of identifying and controlling risks that arises from financial transaction. Okay, so with this definition, I want to give you guys. I don't want to make it very, very complicated, right? I want to make it very simple and brief as possible. So when you're talking about risk management, I want you guys to understand this: that in every aspect of life, beside the forex market, beside the financial market, in every aspect of life, there is risks or there are risks. In everything you do in life, there are price you pay. All right. So let's take this back to the market. In every transaction you take, in every button you click to buy or to sell, there are risks involved. Okay, and these risks are always there. As long as you're in the market, you're going to buy, you're going to sell, you're going to make decision based on what you see. The risks are there. So you have to understand this and you have to have it at the back of your mind. Okay, or you have it at the front of your mind. I just want to make this point very, very clear so you understand. So I will give you a good example and those other things about risk management in this particular video. Okay, so risk management, like I said before, is a process of controlling risks associated with trade, with any trade, not just trade. It's a process of controlling risks associated with any trade. That is why it's very important, an essential part of trading. So when you hear risk management, it is one, if not the most important. It is one, if not the most important part of trading that every trader needs to understand and need to learn. Okay, like for me myself, I learned it the hard way. There's nothing to hide there. I learned it the hard way. So that is why I'm making this as my first video. So you understand and you probably don't make the same mistake. We learn from mistake, which is awesome. But the most of those mistakes are tragic. And trust me, you don't want to go there because it's going to take a lot of time. So that is why I want to explain this concept of risk management to you. So there is a particular strategy I have myself that I use to implement risks. And one of the strategy is this, ways of implementing risk management. Okay, the first one here I want you to understand is identifying risks. Okay, what does identifying risks mean? Um, I will say it this way: it is the first step in effectively risk management. Okay, first step of implementing risk management is identifying the risks associated on each trade. Before you place the trade, before you put on the trade, you need to understand and identify the risks attached to that trade. If it is something you will be able to take, if it's the risks you'll be able to take, if it is not the risks you'll be able to take, you let go. Okay, you don't fight back, you don't argue. Right? The market will present you opportunities, and every opportunity the market presents to you, there are always risks involved. So your job as a trader is to identify the risks. Go to the market, you do your analysis, you do what you have to do to see the risks involved, and it is your job to know if you can take that risk or if you should not take the risks involved. Okay, this includes understanding the market condition, the volatility in the market, and other factors that could implement the trade, other factors that could make the trade move and not move. You need to understand this. You need to have it written down in your journal or written down in a sheet of paper close to you, and always ask yourself before you even place the trade: what is the risk of this trade? Will I be able to take this risk? What if this trade go against me? Am I comfortable with the risks? So these are the questions. These are the questions you need to put in place. These are the questions you need to consider before you put on the trade, before you click on the button buy or sell. Okay. And the second one I will give you guys is using a stop loss. Okay. I want to believe that you're also familiar with the term stop losses or stop orders. And it is very, very crucial. It is very, very important that you have that habit of using stop. Because I'll tell you something. Um, the market, in the market environment, there is an uncertainty component, okay, that we do not know what is going to happen next. We cannot know. We can only predict and react to it, right? But we can't know for sure. We are not certain about what is going to happen. So you're placing a trade as a trader. You go into the market, you're placing a trade, and you're believing because you maybe you make a strategical you made strategy and your strategy will looks perfect, and you're believing that okay this market might do what it will do based on your strategy, and you don't use stop loss. That is a red flag already because you do not know, you cannot know what can happen. There are a lot of factors out there driving this market that you, the retail trader, cannot know, right? Because you don't move the market, you cannot move the market, you don't have the funds to move the market. So you just want to dance with the market, right? You want the market to dance and you dance along. So you need to use stop loss. You need to identify your risks. First of all, like I said, identify your risks. When you identify your risks, you need to use a stop loss. A reasonable stop loss, okay, guys, I want to make this clear. A reasonable stop loss, you don't shoot yourself in the foot by using a tight stop loss. You need to identify, you need to know where your stop will be and place your stop loss and let the market do what it is going to do. All right. And the last one, I just want to give three. Right. I don't want to make the video very long since this is the first video, but I'll be talking more on risk management in my next video, and I'll be sharing my screen on how to implement it. Right. The next video I'll be moving my screen around, but this I won't be touching the screen. I just have to give you guys this right on audio. Okay. The last one is developing a trading plan, and this is also important. I'm not going to say it's the most important, but this is very, very important that every trader must do. You need to have a good trading plan, right? And your trading plan should include risk management strategy, okay, that outlines how you're going to manage your trade and how much risks you're taking on every trade you want to take. If it's 2%, if it's 3% on each trade, you need to have this on your strategy. So, guys, with this, I hope I'm able to break down the concept of fixed management. And in my next video, I'll be walking you guys through the process of how to implement this live on my screen. And thanks for your time. Thanks for stopping by. Thanks for watching. If you find this video useful, don't forget to click on my YouTube channel, share with your friends, and I hope it helps you guys understand how to implement good risk management in trading. So see you guys in my next video. And don't forget, you can always ask me a question regarding this topic and regarding trading down below the comment section. Okay. So see you guys in my next video. Cheers.